We are going to give a presentation about the financial performance of Qantas Airlines according to the annual report of 2012. My name is Ling Liu. First, I'm going to introduce the entity's principal activities. According to the director's report, Qantas Airlines provides passengers with domestic and international flight service. Actually, Qantas Airlines is experiencing a loss this year. The consolidated loss after tax attributable to the shareholder of the parent entity for 2012 was 245 million, according to the consolidated income statement. The CEO of Qantas Airlines is Alan Joyce. The CEO total remuneration in the year 2012 was 5,577,000. The auditors of the Qantas Airlines are KPMG. The audit fees for 2012 were 5,652,000, according to auditors' remuneration report. In total, there were 128 controlled entities in the year 2012. Among them, 111 entities are 100% owned. 4 were less than 50% owned, and there were foreign subsidiaries in New Zealand, Vietnam, Korea, Singapore, United Kingdom, Japan, Indonesia, Malaysia, Hong Kong, and Taiwan, according to Note 32. There were 11 associates and 2 jointly controlled entities, according to Note 15.
Hello, my name is Yingnan. I will continue this presentation. In terms of the jointly controlled operations or assets, we cannot find any interest in the jointly controlled operations or assets. The value of consolidated goodwill was 146 million. The entity has defined cash-generating units for the purpose of impairment testing as the greater of the recoverable amount, inclusive of related infrastructure and intangible asset, and then compared to an estimated fair value figure, which is the present value of net cash flows. If the current value exceeds the recoverable amount, an impairment charge is made. All of this is from the Note 1, Part A. From the Note 2, there was goodwill impairment in year 2012. The amount was 18 million. The Qantas and its Australian wholly owned control entities, trusts, and partnerships are part of a tax consolidated group. As a consequence, all members of the tax consolidated groups are taxed as a single entity. There was a segment disclosure in Qantas, and the basis is the different operating segment activities. The Qantas group comprises the following main operating segments. The first one is Qantas. The second one is Jetstar. The third one is Qantas Frequent Flyer. The fourth one is Qantas Freight. There is a rough diagram of the group structure. We can see from the diagram. There is a rough diagram of the group structure. Qantas has 128 subsidiaries. There are 111 is 100% owned, and 4 companies is less than the 50% owned, and there are 2 jointly controlled entities and 11 associates.
Hi, I am Ziyin. I will continue with the rest of the presentation. First, we will summarize the accounting methods that used in the Qantas in the consolidated accounts. First, the investment in subsidiaries, associates, and the jointly controlled entities, they are accounted for using the equity accounting method. For the directly relevant accounting standards, These items was accounted according to AASB, the disclosure of interest in other entities. AASB 12 contains revised disclosure requirements for the entities that have interest in subsidiary, joint arrangements, associate or unconsolidated structured entities. In terms of the investment in associate, AASB 128 made limited amendments on how to account for the change in the interest in joint ventures and associates. And the proportion allocated to an investor that accounts for its investment using the equity method from AASB 127 is accordance to AASB 128. And the interests are determined solely on the basis of the present ownership interest. There is some new consolidation suit for the Australian accounting standard, especially on AASB 10, 11, 12 and 13, and that has a significant influence on the Qantas accounting policy. And we can look into details. AASB 10 introduced a new approach in determining which investees should be consolidated. And in AASB 11, for the joint arrangements, it requires a joint arrangement to be partially consolidated when the parties has the right of obligations for underlying assets and liabilities. Otherwise, the joint arrangement is considered a joint ventures and the equity method must be used to account for the interest in the joint ventures. And according to AASB 12, it contains revised disclosure requirements for the entities that has interest in subsidiary, joint arrangement, associates, and unconsolidated structured entities, as we mentioned above. Finally, we will look at the fair value measurement from AASB 13. It explains how to measure fair value when required to be by other accounting standards. The amendments are generally to be applied prospectively. And that's the end of our presentation. Thank you.